The vulnerabilities of cryptocurrencies to hacking have been yet again exposed in the latest round of hacks through Solana. We'll be discussing this issue with Brian Norton, COO of MyEtherWallet, as well as the upcoming Ethereum merge, what this means for Ethereum holders, and MyEther's latest projects. Welcome back to the show. Brian, it's been a while. Thank you for being here
Yes,
today.
it has. Thank you for having me.
A lot has happened since you were on the show, I think, a year and a half ago. We're not going to give a full recap of the entire crypto markets, but let's just talk about recent news. Let's talk about Solana's hacks. More than $8 million of funds have been drained from users' wallets. Most of the attack happened on August 2nd. Can you give us a recap of what happened?
So, yes. So what happened around August 2nd, a number of people saw their wallets drained across multiple wallets. At first, researchers were not able to determine what the cause of this was, only that most of the wallets affected were Solana based. What we've later came to learn was that most of these attacks were focused on one wallet, Slope Finance, which had been storing seed phrases in a centralized server. Once the attacker had access to those seed phrases, they were able to drain any wallet where those seed phrases had been used. So we saw mostly Solana being drained, but we saw a few cases of Ethereum being drained from certain wallets because those seed phrases had been imported by users into other wallets. And so what it really drew into relief for us is like the need for client-side infrastructure where users are controlling their seed phrases and no one else has access to those. What was happening with Slope Finance should really only be the case in custodial wallets along custodial exchanges. There's no other real reason for that to happen. It also draws into focus why we need open source wallets, because what was happening in this particular exploit was researchers who normally safeguard this space were not able to get to see what libraries were being used, and they couldn't see what was going on underneath the hood, and it took much longer for the word to get out.
Yeah, I mean, a couple of things have happened since August 2nd. So, first of all, Solana, the team behind Solana, has blamed Slope for what happened. And Slope has issued a bounty for some of the hackers and has threatened to pursue legal action. So, you know, there's a bit of a blame game going on here. Like you pointed out, the seed phrases were compromised. I mean, this is not something that typically happens to wallets. And it's important to note that I think, to my knowledge, hard wallets were not compromised, right? Is this something that can be easily obtained, seed phrases?
To my knowledge, no hardware wallets had been compromised, and I'm not really sure how that would have actually manifested. But yes, you're right. This goes back to blockchain fundamentals, like the ideas of your key, not your keys, not your crypto. It also means, if your keys are shared with somebody else, it's still not your crypto because they have access to it. And so wallets generally, like MyEtherWallet, have always been client-side and open source. It means the users get the keys. We never see the keys. We do not store the keys. And we keep no records of those, and the user has access to them. We also remain open source so that independent auditors can come in, look at the code, and see how those keys are generated and where they are being stored.
Some wallets offer the service of storing keys in some sort of cloud or backup. Should people lose their keys or their wallets, their keys can be retrieved. So if MyEtherWallet is not storing keys on any sort of public forum, not forum, but any sort of storage that can be accessed publicly and or privately, is that not an issue if somebody, I guess, forgets their keys?
Absolutely, and it's something that we have always been focused on. We educating users is that, hey, we are not a bank. We do not function as a bank.
Right.
This is a way by which you can empower yourself to act as your own bank, to store your own assets. And we give users a number of ways by which they can securely store their keys. We also really, really emphasize like if you don't have to import your keys into a new wallet, you probably shouldn't do that. And there are secure ways of doing it, but they are risks. Like use hardware devices, use mobile devices where the key is stored in a secure enclave on the phone. You in hot wallets, make sure that you're only using a portion of your assets in there, and that you are the only one that has your keys, that you have your keys stored in a secure location, not in the browser, not on your desk, not on your desktop, like somewhere offline where only you can access them.
I understand. Now, you offline, you told me that, or you were telling me about how this risk of being hacked is not exclusive to Solana. In other words, what happened to Solana and Slope could, in theory, happen to other cryptos and other wallets, right? Can you elaborate on that point? I think.
Yes. So,
yeah, please.
So in the case of Slope and Solana, this is something that theoretically could happen on any blockchain. I think one of the reasons you see it on Solana is because at this point in their development, it seems like the ecosystem on Solana is a little bit more tolerant of centralized solutions. And I think that this needs to serve as a wake-up call to that ecosystem that, like, hey, we have a track record of success on these other public blockchains on how wallet security should work. And using closed-sourced, centralized wallet infrastructure is not the way to go. It needs to be open and it needs to be client-side. Yeah. Because because you can see it right now with all of this sort of proliferation of new layer ones and layer twos, that you could very easily see this becoming a trend if it's not sort of stopped now.
So let's talk about how you would design infrastructure that would prevent this from happening in the future.
Well, I just think I don't think that we have to redesign very much. I think what we need, like in terms of security, client-side and open source is absolutely the way to go. And then the focus on the user experience. Overwhelmingly.
Can you just define what client-side means?
Client-side means that there's no backend. We don't have a backend database storing people's phrases, storing people's personal information. Your keys are your keys. When you sign out of your wallet, then nobody else has access to it, including us.
And I think for the client, I think they're probably wondering, what can I do now to, I guess, either prevent this from happening to myself or take measures to bolster my own security? You've mentioned some of the things that the wallet should do, but for the user, it's not often clear what exactly is going on in the front end or back end. So what are some of the things they should be looking for when picking wallets?
The ways that you can keep yourself safe are use a hardware wallet wherever you can. When you're using a browser wallet or another web-based wallet, do so with one that connects with your hardware wallet. If you are using a software wallet, make sure that software wallet is open source, and that it is entirely non-custodial. That they are not storing your keys, because as soon as those keys end up in a centralized server, they become vulnerable to attack, and from multiple different vectors. And so you want to prevent that. And those are the primary ways by which you can keep yourself safe, is just making sure you're storing your own keys, you're the only one that has them, and that you're not storing them in a way that's going to leave them vulnerable, such as in the cloud or in your Google Drive or on your desktop where you're regularly connected to the internet.
All right. Moving on now, let's talk about another piece of news that's important for Ethereum in particular. So the Ethereum merge, or as some might call it, the merge towards 2.0. This is slated to be done by the fall. Let's see if the schedule is followed, but it's understood by the ETH community that maybe by the end of the year we should see this. We should see Ethereum move from a proof of work system to a proof of stake system. So explain the biggest changes to the Ethereum ecosystem, not just from a energy efficiency perspective, but from, let's say, a user's perspective, and what this may have, what this may do to the price, if any impact at all.
So for on the user side, just your casual user who's holding and trading, you're probably not going to see that much different. You might see a little bit higher transaction throughput, but beyond that, your user experience is going to remain primarily the same. Most of our wallets, such as MyEtherWallet, we're not the user will see very, very little on their side. We will just kind of seamlessly transition over. What it means for people who are looking to run validators, it means that there currently is already opportunity for staking. We've been staking since, I believe, December of 2019. There's been staking on the Beacon chain. One of the things that will happen for people who have been staking is their stakes will start to be able to unlock, and so they will be able to start to withdraw their stake and rewards, and there will be more opportunities for new users to stake. In terms of how you can kind of think about price, it's very, very difficult to say. I think that we are seeing some price action in leading up to the merge. I think there is some there's some excitement there. But I do think that it really is dependent upon when the merge occurs, what's the state of the market at this time, because the current market that we have right now is also heavily being influenced by the global market,
of course,
outside of crypto, and where we're going to be at the time of the merge will have effects on that as well.
Yeah, I mean, Ethereum has been moving up steadily since late June, early July, but so has the rest of the crypto markets. I mean, Bitcoin was up, global equity markets were slightly up, so a slight rebound we've seen since July. The question I think some people might have is why the merge might have any impact at all on the price of Ethereum. Like you said, it seems to be more on the mining side that things will be changed.
I think that the reason there is this sort of renewed interest in Ethereum in particular, because it's true, the rest of the crypto market is up. Ethereum seems to be leading that charge rather than following Bitcoin, as we've seen in some other upticks. And I think that has to do with the anticipation of staking. There's increased demand for Ethereum leading up to the merge because of those opportunities. Also, liquid staking is currently available across the ecosystem. So there's a number of factors that I think that are kind of coalescing around the merge that is making Ethereum much more attractive.
Okay, so but overall, Brian, what is your sentiment on the crypto space right now?
I think that we're in a really interesting period because while the markets are down from last year, there doesn't seem to be any slowing in the rate of development. We're seeing rapid development leading up to the merge on the Ethereum ecosystem. We're seeing a lot of developer growth in the Web3 and Polkadot ecosystem that we've recently branched out into. The Cosmos ecosystem is also seeing a rash of new projects in the DeFi sector. So I think that like where we are right now is sort of like where we were prior to DeFi summer, where once the market sort of like coalesces and sort of stabilizes, we're going to see like sort of a rapid surge of like interest in these new projects that are being built.
Some people were concerned about the risk of a lot of altcoins being wiped out in this bear market to the extent that we've never seen before, because a lot more altcoins have been created since 2017. that would have a huge rippling effect on the entire crypto ecosystem as money is lost, potentially interest is lost forever. This is a worst case scenario, of course, but could it play out, do you think?
I mean, anything is possible. And there is, we did see a tremendous amount of growth over the last 2 years. And it only stands to reason that a number of alts and a number of projects would falter under that. Like I said, I alluded to before, this is actually the first crypto winter that we've seen where we're dealing with a global economic situation like this. Really, the closest like that we've had in recent memory is 2008, and that's like what spurred Bitcoin's creation in the first place. So this is kind of like we're kind of in uncharted waters as an ecosystem right now, where we're actually going to have to, we're testing our mettle against the global economic ecosystem rather than just, you know, our own insular crypto bubble. So I do think that we will see some projects fall off, and that's unfortunate, and people will lose some money, but the fundamentals of the blockchain space are going to remain strong. And I think we know already that crypto isn't going away. Crypto is pushing forward, and the blockchain space is just going to continue to grow out of this.
Finally, let's talk about MyEtherWallet. You have a new project, Encrypt, that you can give us some details about. But first, let's start by talking about a broad overview of what MyEtherWallet does and what clients can expect to gain from using the service.
Absolutely. So MyEtherWallet is a client-side wallet. We started in 2015. We're the longest running Ethereum-based wallet. We started about 3 weeks after Ethereum went to mainnet, and since then we have been primarily serving the Ethereum ecosystem in all capacities. We have a web wallet and wallets across the both Android and iOS, and now we've revamped our blockchain, our browser wallet, and rebranded as Encrypt. Encrypt is a multi-chain client-side wallet for use in the browser, and it allows for interaction with dApps in both the Ethereum ecosystem and currently the Polkadot ecosystem, with more chains to come. And what it really does is allow users to have a consistent user experience across multiple blockchains without having to manually add coins, manually add chains. And we really think that what we're doing is bringing the lessons we've learned as sort of an old school player in the wallet space to these newer chains, and allowing our users to get access to blockchains that they heretofore hadn't been able to do, and conversely bring users from those ecosystems exposure to the Ethereum ecosystem.
Excellent. All right. Well, Brian, thank you for your updates in the markets, and best of luck with this new project. I'll hope to speak with you again soon.
Thank you. Thank you, Dave.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.